Hidden cuts to retirement payments, what the SSA just changed. The Social Security Administration issued a 2026 rule package that materially revises core benefit calculations and related rules for new beneficiaries. Key changes take effect for claims filed on or after January 1, 2026. A grandfather clause preserves the old formula for claims filed before December 31, 2025. Benefit formula adjustments. Bend point percentages reduced for new beneficiaries. First band from 90% to 87%, second band from 32% to 29%, third band from 15% to 13%. These percentage reductions lower lifetime benefit amounts for those who do not lock in the old formula. Estimated impact, average reductions roughly 40-40-40-75 monthly for new beneficiaries, projected $12,000 to $12,000 to $12,000 to $22,500 over a 25-year retirement for typical earners. Earnings, spousal, and survivor rules. Earnings limit for workers below full retirement age set at $23,400, with penalty rate increased from $23,400, with penalty rate increased from $23,400, with penalty rate increased from 1 withheld per 2 earned to 2 earned to 2 earned to 1 withheld per $1.50 earned, applies to working retirees between age 62 and full retirement age. Spousal benefit coordination now requires simultaneous claiming of spousal and personal benefits, eliminating the common claim and suspend, claim now delay later planning strategy. Survivor benefits will be calculated using the deceased spouse's reduced benefit amount rather than the deceased's primary insurance amount, reducing survivor payouts in many cases. Scope, timing, and related changes. Grandfather clause. File before December 31, 2025 to preserve the prior formula. Delayed retirement credits remain unchanged, 8% per year past full retirement age. Disability benefits and SSI were stated as unaffected by these specific 2026 rule changes. Concurrent federal moves included an 8.7% Medicare Part B premium increase for 2026 and adjustments to Part D coverage thresholds and high-income surcharge brackets. Procedural and political context. The SSA issued changes with limited prior public comment. Advocacy organizations and retirement planners mobilized immediate outreach and objections. Congressional and public responses are active and may influence implementation or timing. The SSA framed changes as measures to address long-term trust fund sustainability amid projected reserve depletion risks. Timing and limited notice raised urgency for affected individuals. Practical actions for those near retirement. Obtain current Social Security statements and recalculate projected benefits under both old and new rules using SSA calculators. If the old formula is financially preferable, consider filing, or other locking actions, before the December 31, 2025 grandfather deadline after consulting a qualified, fee-only financial advisor or tax professional. Married couples, potential survivors, and workers planning to work while claiming should review coordinated claiming, survivor projections, and earnings limits immediately. Monitor congressional activity and advocacy announcements for possible legislative responses or implementation changes. Bottom line, the 2026 SSA rule package changes bend point percentages, earnings penalties, spousal coordination, and survivor calculations for new claimants, with a December 31, 2025 grandfather cutoff. These structural changes are likely to reduce lifetime benefits for many new retirees and require prompt review and planning by anyone aged roughly 62 to 70 or those expecting to claim soon.